Hello, I am Stephanie Joy, the attorney at All Things Social Security and Joy Disability Law. Your video is about to start. I just wanted to remind you that if you click the join button below, you can learn more about the memberships offered at a very affordable price that can give you a little more direct attorney answers to your questions. Have a great day and enjoy the video. Good afternoon here. Just squeezing this one in the middle of taking a little break from some 821 work, SSA 821, as you know, maybe if you are following along. I've been working on helping someone put together a dual requested 820 and 821 that went back 30 years. Okay, that in itself is a nightmare, but want to talk about the 821. I'm sorry, the 820. We're doing the 821 and the 820 kind of at the same time. Whichever one gets done first, we'll go out and then we'll get the other one. So with the 820, this is self-employment. And in this case, very minimal self-employment, but combined with the W-2 work was putting the person over SGA, potentially. However, when we took a closer look at the earnings from the self-employment and looking at the tax returns in the Schedule Cs, the person didn't deduct all of their eligible business expenses under IRS rules when coming to her net earnings from self-employment. And when you took the net earnings that she did have and added it to the W-2 for that month, we would have a few here and there over SGAs. So I think it's kind of important to be really specific and detailed and exacting. So putting together her statement along with her receipts, showing, for instance, a cell phone bill that is imperative probably to every self-employed business. I can't even think of one where you wouldn't need it. And usually I'd say internet also, but that might vary. But certainly cell phone, particularly if you have customers. So in this case, the cell phone was never written off, nor was internet, nor was a home office that happened to exist. Now, home office is usually, unless the IRS changes it, if you take the old standard on that, instead of adding up all your square footage in your house and blah, 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 and subtracting all your bills by percentages of your square footage, you can get a $1,250 deduction, or I should say business expense write-off per year. And I'm not sure if I'm even saying that right. My tax friends will excoriate me later. So, I mean, I have a home business, a practice with a home office, and I write off my office too. So we're thinking the $1,250 can be divided by 12. It's 104 and change per month of business expense that had not been written off per month. That can be a big deal if you're only over SGA by $100. Now you're not. So, but you have to, provide the documentation, which in this case, home office, it's kind of clear. They know that everyone with a ongoing business has a home office. Where else are you going to get the stuff done? So that shouldn't be a big deal. I like to do things in a 795, SSA 795. It's where the claimant certifies to her the facts that she knows of. And it's all under oath of sorts. It's subject to, perjury, I suppose, or, violation if you're knowingly saying something untrue. So you never, ever want to do that. The cell phone bill, keep in mind, if it's a cell phone bill of a cell phone that you use for business and for pleasure, you're going to want to analyze about what percentage is used for each. I would say, like, for me, it's like 100%. Because I don't talk to people outside of that. There's also internet. And again, if you're the type that surfs around and does things, your internet might be less than the full amount, the amount attributable to your business. And again, same thing for cell. And those things can really make a difference. I don't know if it will eliminate all SGA months at this joint at this juncture with this case, but we're certainly going to find out. And then, of course, there's probably other business expenses like that you don't typically sometimes do. Like if let's say you have to go to Staples and you do it 4 times a year, you don't really even pay attention to it because you spent $80 here, 110 over there, and you don't really pay attention. If you have those receipts in those particular months, you could write it off. Or if it's something that you bought that covers you for 3 months, let's say it's envelopes or ink or whatever, you can prorate that Staples expense. I say Staples, I don't mean to give them a toot. I really don't. Whichever place you go to it could be your local grocery store for stuff like that sometimes, or your CVS or your other, big pharmaceutical place. They often have stuff like that. It's like big superstores now. So if you spent $100 in 3 months, you might be able to write off another $33 a month. And again, if you are blasting way over SGA, this probably won't help you. When I say blasting, I mean $1,000, $500, maybe 500 or less. This stuff can work. It depends really what you're spending on your business that you're not really thinking about. I know very few of us write off everything we can. If we are self-employed and are not really intent on sparing every dollar. I have to say, back in the day, I used to nitpick over every dollar I could write off. I spent more time nitpicking and losing sleep. I kid you not. And what would it be? Like an extra $50? Come tax time in my pocket. I'm like, I'm not doing it. I'd rather spend more. And it's not that I think I should be giving Uncle Sam more of my hard-earned money. It's just that it comes down, sometimes it comes to what's more important, my sanity or that $50. Sometimes I'm just like, give it to him, give it to him. But we're all different, right? So when it comes to this, though, this is when you do have to be nitpicky if you find that you've broached over SGA when not considering the finer details that show that you actually didn't go over SGA. You don't want to lose your benefits. Or if you're in your extended period of eligibility, you don't want to owe back any of those months of payments you've already received during that time. So unfortunately, I think it's really important to keep your receipts. If you have a scanner, if you don't have a scanner, get a scanner, scan it on, just keep it in one big annual file, like, under taxes, 2024, business expenses, boom. Always just save them in there. You don't have to be doing anything fancy. When you need them, you have them. You don't have to be over analyzing them as they come up in real time, but just save them so that if you have the need to do that later, you've got it. Okay. And one thing, and I learned this from a prior case, because I don't really spell this out for you in any of the laws and rules and POMs and HELEX and all those. Even if you didn't write it off on your tax return, the tax return in your Schedule C is one piece of evidence. But it can actually work in your favor. Like we're showing the Schedule C that shows there's no write-off for the cell phone. There's no write-off for the home office. There's no write-off for any of that stuff. And that's important because you kind of need to show it. Now, of course, this goes back 30 years, and we don't have tax returns going back 30 years. Even the IRS, I don't think keeps them that long. So the rest is going to have to go on. Well, the rest won't really matter because the W-2 work started in 2020, and the self-employment work, which started much earlier, was so minute it doesn't even breathe down half the neck of SGA. So I'm not concerned about those. Go with the full-blown revenue you pulled in because you don't even need to show you had expenses. But for the ones that came later, once that work came into play with that extra income, which is really good income under the circumstances, this is really important. So anyway, we're doing the best we can, and I am privileged to be doing it with her. Super, super fun person. And it couldn't come at a worse time, really, probably business-wise, because it's super, super busy here. But I am enjoying helping my fellow man. Okay, I'll talk to you guys later. Bye.